Hello, thank you for attending this webinar. Today we're going to be talking about ALE or not an ALE. That is the question. Brought to you by the ACA Gurus, and today I'll be presenting. My name is 𝘀𝗵𝗿𝗶, and I am the principal consultant and owner of the ACA Gurus. So let's get started. So what is an ALE? Well, this is not an ALE. This is an ALE, okay? And I'll be happy to have one with you after hours while we chat about anything else. But for the ACA, we're talking about an ALE, okay? And what is an ALE? Well, it's an applicable large employer. And that's defined by a company that has 50 or more full-time equivalent employees on a monthly average in the previous year. We call it 𝘁𝗵𝗶𝗶 here at the ACA Gurus for short. Just makes it easier not having to say the whole phrase altogether each time. So that's what an ALE is. Now, what is not an ALE, and there's a lot of confusion about this, is a company that has 50 full-time employees. That is not an indication that the company is an ALE, so you have to be careful of that. Also, full-time equivalent employees include full-time employees. And we'll explain why that is later on in this presentation. And then the term employer, which of course is a company that employs people, the term is also used for control groups. And a control group is basically a group of companies. So in terms of talking about the ACA, in many times you're going to hear the term employer refer to the whole control group, to the group of companies. Okay, and I've put a link to the IRS's website where you can find more information about why it is an ALE with more examples and more detailed explanation. But that'll just add to the acumen you'll have about ALE, or the applicable large employers. And what is a control group? Well, a control group is a group of companies related by some kind of common ownership as per Section 414 of the Internal Revenue Code. Now, what that means is that basically if the owner of your company has ownership of another company, those two companies become part of the same control group. It's a little more complicated than that because of situations, for example, in which the spouse, they're married, and the spouse has ownership of another company, well, their company will also become part of the same control group. And there's other rules and other situations that will also make other companies be part of the same control group at the same control group as your company. So you have to be careful with that. I left the link here for you to investigate a little bit further if you would like, but because it's the process of actually making that determination is really a legal issue. And unfortunately, even though we would like to give you that advice and help you with that, we can't because we are not lawyers. So we won't be able to give you that advice. So we will refer you to an ERISA attorney who will be able to check those things for you. Now, have in mind that if your company has quite a bit of employees and you know that the owner has just one other company and the spouse doesn't own any company and so on and so forth, and it's very clear cut like that, well, it'll be easy to make the determination. And an ERISA attorney will not necessarily have to be consulted with. But again, just have in mind that that situation may arise in which the owner of your company may have interest in other companies, and you have to consider that in order to see if your company is part of that same control group. So here's a quick graphic to show what I mean. So the owner of the company, of your company, is the owner of the company, right? But the owner might own another couple of companies, and so the three companies altogether are part of the same control group that is owned by the owner. As I mentioned, it might be that the owner has a spouse. So if the spouse has a company, that company might be part of the same control group also. Okay, and that's important because the control group, okay, is if all the companies within the control group need to file the ACA if they are an ALE, which is what we're talking about here. When is a control group an ALE? So a control group in ALE is when the sum of each of its company's monthly full-time equivalent employees is calculated for each month of the year, then added and divided by 12. So basically the same situation as if one company, one individual company, being to determine if that company is an ALE. But in this case, you'll do it for all the companies altogether. Okay, and again, the same thing. If the total is 50 or more, then the control group is an ALE. Now, have in mind that if a company has less than 50 𝘀𝗵𝗶𝗲s, but it's part of a control group that does have 50 or more 𝘀𝗵𝗶𝗲s, that means that even if your company has less than 50, they still need to offer coverage and report that by doing your ACA. So that's why it's important to know if you're part of a control group, because again, if you have less than 50, the control group might have more than 50 𝘀𝗵𝗶𝗲s, and you will need to file even though you don't have you don't meet the threshold of 50 𝘀𝗵𝗶𝗲s by yourself. And that's unless you have no employees. If the company, well, you wouldn't be working for that company, but if there's a company that is part of the control group that has 0 employees, well, that company doesn't have to report, doesn't have to offer coverage because there's no employees to offer coverage to, and they don't have to file. But still, that company needs to be reported in a sense that it has to be listed in Forms 1094C of the other companies of the control group. So again, even though it doesn't have to file, it still has to be listed in the 1094Cs of the other companies. 1094C is the company information form that you submit with all the other Forms 1095Cs. Okay? So calculating the 𝘀𝗵𝗶𝗶, it's a little bit easier said than done, just because you have to be a little bit careful. First, again, the full-time equivalent employees needs to be calculated for each month of the previous calendar year, not the year that you're reporting. So today we're in 2025. You don't calculate your 𝘀𝗵𝗶𝗶 based on the current year. In order to figure out you needed to offer coverage to your employees in 2025 and report that fact with the ACA, with the IRS, you will need to make a calculation with numbers from 2024. Okay, so that is why we talk about previous calendar year. Now, if the full-time equivalent employees for each month are added, you need to add them and then divide them by 12. And the result will be, again, the average, the full-time equivalent average, monthly average for the previous year. And if that's 50 or more, then you are an employer, you are an ALE for the current year. Okay, and you would have had to offer coverage, of course, and then report that. Mind you that if it's your first year becoming an ALE, you have a grace period, okay, 3 months to actually figure things out, get insurance, and offer it to your employees. However, it gets a little bit complicated because if by any chance the following year, for example, in 2025 that we're talking right now, and when you at the end of the year you calculate your 𝘀𝗵𝗶𝗶s to figure out if you're an ALE for 2026, okay, and it ends up that you are not, okay, well, you have to file, right? But if you are in 2026, for 2027, you become an ALE again, you have to offer starting January 1st, okay, because again, that 3-month threshold or 3-month grace period that's given is the first time you become an ALE. And the IRS does not give any sort of guidance regarding if you become, you go under and over the threshold in the future. So if once you become an ALE the first time, that's the only time you have that grace period based on the strict interpretation of the law. Okay? So let's continue. Calculating the FTE, the full-time equivalent employees for 1 month. So as an example, we're using January. So full-time employees. Full-time employees are typical employees that we know about. They are hired, expected to work 30 or more hours per week or 120 hours per month or more. And these are typical employees that go through a waiting period and you offer coverage and so on. Okay, so no discussion about those. Now, full-time equivalent employees, again, this is a term that came with the ACA. So what are they? Well, these are all the non-full-time employees, okay? And these are your part-timers, your seasonal workers, and so on. Now, there are certain categories for certain industries in which some employees might not need to be counted for this. That's very specific, and we'll have to look at your industry, at your company, and then make that determination. However, for the majority, it's just all the employees that are not full-time employees. So what you do is you add all those hours for all those employees, and then you divide all those hours by 120. And the result is going to be your full-time equivalent employees for, in this case, the month of January. Okay? So as I mentioned, full-time equivalent employees for January will be the total of full-timers plus full-time equivalent employees. The reason it also includes the full-time employees is because technically the full-time employees will also need to be counted and divided, in your calculation. However, there'll be no change. The ACA law just talks that you can count full-time employees and then add the full-time equivalent, but instead of actually mentioning full-time and plus full-time equivalent employees all the time, the term that is used across the industry, across the legalese, is full-time equivalent employees, and that includes the typical full-time employees. Okay? So, for example, if you had 20 full-time employees for the month of January, and then the rest of your employees worked 720 hours, you divide that by 120 hours, and the total is 60 full-time equivalent employees. You add those to the 20 plus 60, and you get 80 full-time equivalent employees for January. Okay? That's what you need to do for January. You have to repeat the same process for each month of the year. Okay? So once you have them all, you add them. And in this example, it adds up to 641 full-time equivalent employees. You divide that by 12, and the total will be 53.42 𝘂𝗶𝗍𝗲. 53.42 is higher than 50, so your company is an ALE. And being an ALE, again, assuming that these numbers for 2024, you need to offer coverage and report for 2025. Okay, so that's for one company. Now, what about for a control group? Okay, well, for a control group, it's the same process. You just have to add all the numbers for all the employees that are part of the control group. The only issue that we encounter with that is that sometimes the HR departments in both companies don't have the same, don't work the same way. So sometimes it's a little bit difficult to get their numbers and so on and so forth. But and then determine what HR department, who is the person that's going to tell you all this information. So once you get that figured out, what you need to do is you add the full-time equivalent employees for each month of the year for each one of the companies. And then you can do it both ways. You calculate the 𝘂𝗶𝗍𝗲 for each month, and then you add them, or you add all the FTEs for each month, you add them, 1,029 in this case, and then you divide it by 12, and you get 85.75 also. So here in the example, again, 1,029 divided by 12, it's 85.75 𝘂𝗶𝗍𝗲s. And that number, 85.75, is bigger than 50, so the control group is an ALE. Now, company 1, as you can see, has 50.41 𝘂𝗶𝗍𝗲s. So this company by itself will be an ALE. But company 2 has only 17, as well as company 3. So if they were not part of the control group, they will not need to file. They will not need to offer coverage or anything. Okay? They'll be off the hook. However, they're part of the control group, so they need to file, they need to offer coverage, and they're responsible for that individually. Now, if they don't, let's say company 2 says, I'm not filing, well, they'll get penalized, and the penalty will go to that specific company. Okay? Now, in company 3, I wanted to show that company 3 has no employees for starting September all the way to the end of the year. Again, that's totally fine. Okay, even if the company ceased to operate, okay, it still has the obligation to file for as part of the control group for the first part of the year. Now, if there was another owner that that took over the company, it'll depend on how you negotiated if they're going to file, not file, and so on and so forth. But from starters, if you were part of if the company was part of the same control group for the first part of the year, you need to report for that first part of the year. And again, even if they have 0 employees by the end of the year, you still make the same calculation. You just add those and calculate 𝘀𝗵𝗵𝗶, and then again, if they're part of the control group in this case, you need to file your offer coverage to those employees. Well, probably not for the following year because you probably don't have the company anymore because it would have been sold, let's say. But still, that number makes the other 2 companies that are left for 2025 to have to file. Okay. Now, sorry, to have to offer and file for 2025. Again, we're assuming that these are numbers from 2024. So let's continue. Now, this, and that's pretty much it. Again, the calculations are quite simple to do. Of course, we can help you with that. Just give us a call, contact us, and we'll be very, very happy to help with the process of making that calculation. Okay. Now, it's important to be careful with certain things. First, using your current year employee numbers to determine your NALE, you need to use the previous years. Again, it's 𝘀𝗵𝗵𝗶 is full-time equivalent employees on a monthly average in the previous year. So again, today we're in 2025, so you need to use numbers from 2024. Okay. Now, in many companies, at this time of the year, let's say in the middle of the year, they decide, oh, let me figure out if I need to do the ACA, and they just take their numbers from 2025 and make some sort of calculation, which would not be correct. Okay. Again, in order to figure out if you need to file for 2025, you need to use numbers from 2024 and figure your FTE or 𝘀𝗵𝗵𝗶 for based on 2024 numbers. Okay. Then you must be careful with assuming that your company is not part of a control group. Consult with ownership or the C-suite, and then an ERISA attorney to be sure. Okay. Like I said, it could be clear cut because everybody knows. Okay, there's one employer. The employer is single. The owner is single, and he owns another company. Doesn't have a spouse. Doesn't have kids. Perfect. Very clear cut. He owns both companies. Both are part of the control group. That's it. But life is a little more complicated than that. So you need to ask questions. If you're in HR or you're a benefits broker, it's in your best interest to just figure it out. Talk with ownership and be sure that they are not owners at another company, or they are. Figure out that those other companies will be part of the same control group, because it's important to first determine if they are an ALE as a control group, right? And then second, if they are, you have to figure out and contact the other companies to actually talk with the HR department and figure out who's going to again tally the numbers and so on to make the determination if the control group is an ALE. So you have to be careful. You need to put a little bit of legwork in order to figure that out. Unfortunately, again, we would be happy to help you out in the first steps of that. But then the final determination will need to be run through an ERISA attorney, because it's a legal matter. Okay. Next thing, be careful with assuming that there will be any changes to the ACA employer mandate that will change your filing obligation in any way. In Trump's first term, there was quite a bit of companies that approached them and said, we're not doing the ACA because Trump is going to get rid of it. We're not doing it. Okay, we of course advise against that, but many decided not to do so. So ultimately, 2 or 3 years after, that's how long the IRS takes to send out penalty letters. They got penalty letters gigantic penalty letters because it's not only the penalty for not filing, but also basically the penalty is duplicated because the IRS assumes that you had intentional disregard to filing, meaning that you didn't want to file, you didn't do the effort or anything. So and those penalties tend to be very, very high. So the same thing, and Trump did a big effort to try to get rid of the ACA employer mandate. He was able to take away the penalties for the individual mandate, meaning that there's no consequence for not having insurance anymore because the penalty is zero. So, okay, that was taken care of. But he was not being able to take away the employer mandate, which is what concerns us. And there's no indication that he will do anything. He even mentioned that he will touch the ACA only if he comes up with a better plan. And his big, beautiful bill that at this point has passed the House and right now is in the Senate, there's nothing about any changes to the ACA. So it's business as usual. And again, do not assume that your obligation to report is going to change in any way. Okay? Next thing, be careful with blindly assuming that your benefit brokers and or your payroll provider's advice to not file is correct. Okay? Unfortunately, a lot of brokers out there don't give this advice that we just gave to companies to, again, figure out if the ownership has ownership in another company or the spouse and so on and so forth. So the broker just comes in and says, okay, how many employees do you have? I have 20 employees. Oh, okay, perfect. You don't have to file. And that's it, right? But that's many cases not the case, and you might need to file because your company, unknown to you and to the broker, of course, is part of a control group. So you have to be careful. Payroll companies, very similar. Many companies that are part of the same control group unknowingly use different payroll providers. The payroll provider only sees the numbers that you have as your particular company. And they're not going to ask ownership structures or anything because it's not their concern. They do payroll and that's it. And they do payroll very well, I will say, but not necessarily ACA. They're experts at payroll, but not at the ACA. But that's another thing. But the thing is that they don't have all the information, and they don't take the extra step like us at the ACA Gurus to actually try to help you and advise you of the steps you need to take to find out if your company is part of a larger control group. So just be careful. When they tell you, no, you don't have to file, do your own research. Just ask the ownership, ask the C-suite, consult with an risk attorney, just to be on the safe side, because you do not want to get penalties for not filing. Okay? Next, be careful with confusing your FTEs, your full-time equivalent employees calculations, with how you calculate variable hours employees averages variable hour employees average hours to determine eligibility under the look-back method. Okay, this is a totally different thing, but we've seen many employers and even benefits brokers making mistakes here. As explained, full-time equivalent employees are full-time employees, of course, but basically they are the employees that are not full-time employees for which you add all the hours and divide it by 120 for each month, right? And then you add that from the previous year to then divide it and figure out your 𝘀𝗶𝗍, full-time equivalent employees on a monthly average in the previous year. And then to determine if you're an ALE. That's what we spoke about here. However, the calculation for variable hour employees is based on the look-back method. That is a method to determine if your employees go over the threshold of hours worked on average in order to see if you have to offer coverage. And how it works is you have a measurement period, typically a first initial measurement period for that the new hire, in which you take a time frame. It could be month by month, which is crazy to do month by month. We recommend to our clients to do it for a year. And during that year, you measure the hours worked for that particular employee, one employee, that particular employee. You add the hours that they worked, and then you divide it by, in this case, 12, in a 12-month measurement period. And if that average is 120 hours or more, you need to offer that employee coverage as if they were a full-time employee that went through the waiting period. Okay, and there's after what's called an administrative period during which you can offer the coverage and do the paperwork and all that, and then they are covered afterwards. Okay, and then there's a standard measurement period that should be the same amount of time, 12 months, and then an ongoing measurement period. Ongoing and standard tend to be the same thing sometimes, but sometimes they don't match. It's a little bit complicated. But the basic thing that you need to understand is that you have to know to differentiate them. Okay, again, full-time equivalent employees different from variable hour employees, average hours of work. Okay, so that's pretty much it for this. Now, I know you have a lot on your plate, and you say, oh my God, how am I going to do this? And totally understandable. We've been working with HR departments for over 10 years. So we know your reality. You have to deal with payroll, you have to deal with employee relations, you need to figure out benefits, what benefits to offer, what benefits not to offer, track all that, FMLEs, all kinds of things, right? So we know that it's difficult. And again, I know your employees appreciate you for doing that. However, the ACA needs to be done. It's not something that you can just put under the rug or anything. You need to do it. So in that respect, can we help you? Absolutely. We can help you with your ACA reporting, but not only the reporting. Our company is called the ACA Gurus, and our service is called Employer Mandate Compliance Services, which is a lot more than just filing your 1095-Cs. Okay, it's checking that your data is correct, that checking that your data is being on time. That in terms of getting it ready to produce your 1085-Cs. It has to do with selecting the correct codes to represent a specific situation, and put certain code combinations that do not raise red flags for the IRS, and so on. So yes, we can help you with that. We dig into what your business does. We try to understand your business in order to make the determination of not only what codes to use, but also the strategize from the beginning of the year on how to approach the compilation of your data to make it the most reliable to keep you compliant and penalty free. Okay, so thank you very much for attending. It's very appreciated. And again, you can email me. My email, very simple, my name, Sandro at theacagurus.com. You can always call me. It's 954-866-9911. It's a cell phone, so you can just text me if it's easier, and we can set up an appointment to talk a little bit further. And of course, you can go and visit our website at theacagurus.com. And of course, you can follow us on LinkedIn. You just type the ACA Gurus, and you'll find us there. Okay, well, I hope to hear from you soon. If you have any questions, shoot me an email. Again, it's Sandro from the ACA Gurus. Hope to see you soon. Have a great day.